it also punishes traders, right? Like if you get in there and you've got this whatever newfangled idea of AI doing the trading and this and that, it, you're too smart for Bitcoin. You're too smart for yourself. Like you're going to get screwed because, what you really need is you need to have a very simple vanilla position. Yeah. I mean, one of the things is as a person who started, had many sequential startups, right? As you definitely do not bet the ranch on these startups. You can bet all your time. You pretty much have to bet all your time on it. So in terms of a time commitment, you have to be at 120%. But otherwise you're not going to make it in a startup. Because the guy who works 9 to 5 has no shot against the guy who's going to be working from 7 till 3 in the morning. That guy's will win over the guy who's doing 9 to 5.
He loves
So
what he's doing.
you kind of gotta do that, which is much better to do in your 20s and 30s than to when you're 40s and 50s. It's much more difficult to do it. Now, the best solution is as you get older, you get somebody younger to do the heavy lifting, and then you can kind of you take a more of a chairman of the board relationship, and you've got somebody out there who's doing the who's in the trenches and who's staying there until 2 in the morning. But nevertheless, I just think that the odds of survival of these startups, I've defied the odds. I'm sort of still not sure exactly how I managed to do it, but I've defied the odds. I've had 12 or 13 startups, and 11 of them have been successful. Okay, meaning exits over $10 million, right? So
That's probably in
I'm
the like 99 percentile of all the startups.
maybe even more. Like, I mean, in terms, like, I've not met any person who's had a better batting average almost than me in a period. Now, obviously, there's a lot more guys started YouTube. You had one startup, doesn't matter. You know what I mean? But in terms of track record, I've had a really great track record. But I kind of sold early. Like I somebody came around and said, Fred, hey, I want to buy this thing from you. I said, yours. Most of the time that was the right move. A few times it wasn't the right move. And and but uh that was sort of the trader in me that sort of said, if somebody comes to me and offers me a bunch of money for something, I'll just hit the bid. You know. Now, the trader in me, you know, I think that was an obstacle to get into Bitcoin, right? The trader in me says, well, why should I buy Bitcoin when there's this other thing that I can buy that's much cheaper, right? Like surely, EOS is a better buy than Bitcoin because it's, 1/5 the market cap or 1/20th the market cap of Bitcoin and it has fast or whatever. Yeah. Surely, XYZ token, is better. So, you know, I think it's difficult for somebody who's a value investor to really understand Bitcoin, and it's difficult for a trader to want to stick around in Bitcoin, to really get it to the point where you're going to be holding it, for a very long time, like I have, right? So I think you kind of got to get to that orange pill thing that you realize this is not a trade, and that's tough. It's tough to get. I mean, I saw Kyle Samani from Multicoin was just on a podcast with the Bankless guys just today, and he was talking or yesterday, and he was talking about how he's long Bitcoin, but he's sort of like intellectually short Bitcoin, whatever that means. But he's like, and they're like, well, so you're more of a value player. And he's like, yeah, exactly. A value. Like Bitcoin at 1.2 trillion, I'm a seller. Like, well, okay. So you like the cheaper version of that, So, well, again, there is no second best, unfortunately for you, these things don't trade like, waste disposal companies, where you're getting the cheaper one. And that I think that's a really hard, very hard for a lot of investors and a lot of people to understand. And I don't think most of them will understand it. I think Bitcoin's going to continue to outperform, and most people will continue to not understand why it's outperforming.
Because
If I had to
it's a
guess.
once in a generation event, who has had this prior experience where a new money was created and they had the opportunity to participate, and a new asset class being emerged and monetized from zero when nobody really thought of it to be anything, and it defying all the odds in terms of government capturing it, government killing it, a bug appearing or a million other copies showing up. It has had all those things thrown at it, and it has survived. I don't know a lot of people who could have predicted this. Many of the even Bitcoin developers and programmers, they didn't have like 100% conviction themselves. A lot of them are not super super rich because when they were working on the code in 2012 or 13, they would actually see like 100 different ways this can break, right? So they actually had sometimes even more of a cautious approach in terms of financial decisions about it than other people.
No,
And
I totally look. Because I finished this book on Bitcoin, and it's like, I've talked to so many OGs now, and there's there's a lot of people who had a lot of Bitcoin in 2013, and 2017, and they don't have a lot of Bitcoin anymore. You know what I mean? And it's it's really amazing how uh this thing kind of was successful at sort of extracting Bitcoin and distributing it from these original whales. It really is amazing. Now, sure, there are a few people, who held on, and who did very well, Simon Dixon, is an example of, somebody said, I've only bought more Bitcoin, like, but they're the exception. They're not the rule, right? Most of the people who had a lot of Bitcoin, they lost their Bitcoin. They sold their Bitcoin. Um, so I think it is a once in a generation thing, and even people who are deeply involved in it they all underestimated it. I think everybody underestimated it, and I think everybody's still continuously to underestimate it because, look, I think, and you think that Bitcoin is going to $1 million. Okay. If Bitcoin goes to $1 million, um, realistically, there's, and I don't know what I'm going to do, start a foundation or something. I don't know. But like, if this happens in the next 10 years, I'm not a person who needs really change my lifestyle. I'm not looking to change my lifestyle or anything. So, if this thing happens, I have more money than I can possibly have, and um, and I don't need to do anything. I just need for that to happen, right? So the question is that event? Are we still on par track for that event to happen? I would say everything that I see is that event is going to happen, right? It probably will happen, right? And I don't need to do anything. I don't need to buy the dip. I don't need to sell if it hits something. I just need to sit there and wait for that event to happen. That's it. And I'm in a nice position that no matter what path it takes to get to 1 million, I'm okay with whatever path it takes to get to 1 million. So the only question I have is, does it get to 1 million? or thereabouts. If it goes to 2 million, fantastic. If it goes to 500,000, great. I don't care. Um, but I think that, that even though we kind of have gone through all the numbers and everything and looked at all the stats and the graphs and the adoption and everything else, and we have probably some of the best statistical knowledge of this thing of any people on the planet, right? Anybody. And, even us, uh, I think, part of us is like, well, I guess it's going to happen. It probably will happen. But, I'm not placing an order for a supersonic jet, that for 2030 delivery. I'm not doing that. If it comes, it comes. But I think everybody underestimates it. That's just the nature of it. And then you have days like today or the other day, and you're like, oh man, it's like, people are selling it. They're going to try to ban this or that. It ultimately doesn't matter. It just doesn't matter. Like Bitcoin will always find a way. It always finds a way back, and it always finds a way back up. And it's quite unpredictable, right? So, I think it's amusing looking at it, and I think it is kind of a religion. At the end of the day, once you get it and you're really into it, it's kind of a religion. It's so much because so much of your thought process and stuff relies on that belief, right? So, I mean, I think if you're a suicide bomber and you're going into the crash your plane in the World Trade Center, you better believe that the 72 virgins are waiting for you on the other side. And us Bitcoiners, we believe that the $1 million Bitcoin is waiting for us, some point in the over the rainbow, right?
And it,
So
and it kind of builds your conviction over time as well. Like every time you think it's dead, it comes back stronger. And like believing in Bitcoin's success has worked for the last, 10, 12, 13 years. And it's always surprised the naysayers. It's always killed the short sellers, and it always killed everyone who said this thing has no value. So over time, by taking that crazy position of relying, a significant part of your portfolio uh, on relying on an internet magic internet money, but it has worked and it rewards you for kind of understanding it, and it kind of every day
if you don't have that conviction, you're going to get shaken out of it. There's just no possible way you're not. It's going to it it will it's gonna it'll shake you out of the position. But I mean, I also think that it's sort of like once you do get it, um, I think that you do have a little bit this calm, like you sort of feel like a little bit like if you don't really worry about the value of your house, if you own a house, if there's the house next door selling, you're not like, geez, I got to sell my house so I can get in advance of this, rash of sales. Yeah, it's more like, yeah, okay, well, house next door sold, for not as much as I want to sell, whatever. But
that you see a value with your own eyes, right? So you
yeah,
trust yourself.
um,
You know,
you
I've
see the
always said
value.
I've
Yeah,
always said that Bitcoin punishes tourists. So, and it rewards people who have a deeper understanding, and there is a poetic justice in that, right? There are people who just want to join Bitcoin and make a quick buck and dump it on others and leave.
yeah.
So, interestingly, Bitcoin always punishes those people, and I love to say it. It's very interesting.
No, I think it's true. Look, it it also punishes traders, right? Like if you get in there and you've got this whatever newfangled idea of AI doing the trading and this and that, it you're too smart for Bitcoin. You're too smart for yourself. Like you're gonna get screwed, because what you really need is you need to have a very simple vanilla position. You know, uh, even just it punishes people who wanted that extra yield and put it in Celsius, or BlockFi, right? As opposed to holding it themselves, right? Now, I do think the ETFs are a very valid way to hold it. And that, you know, there are problems with self custody. You can lose the keys, you can screw up, blah, 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 right? So, especially for older people, I think an ETF is a preferred way to go. Yeah, there's some very small carrying costs, 20 basis points, but um, you know, tax considerations aside, if I was starting out right now, I would buy an ETF because I just like the idea of somebody else worrying about holding the keys. I think that's a great way to go. But I think you have to have a very, very long-term position approach to this. And you cannot look, you can look at it and you can follow it every day, but uh it, the only purpose of this is to strengthen your conviction and strengthen and I think that's the one thing we can convince people of is, okay, wait a second, this is not crazy. You're not completely insane by doing this. There's actual, there's an actual fundamental reason why Bitcoin is going to be valued heavily in 5 years. Now, I can't say the same about Ethereum. I think there's some scenario that Ethereum is more or less worthless in 10 years. It's possible, right?
No, I have information from, one of their developers. I was talking to him and he was like, he was a kind of a much more reasonable guy in terms of realizing the limits of Bitcoin and Ethereum, both systems, and having a nuanced view, and not like other Ethereum maxis. But he was just telling me that while we're working on this code, we know that a lot of what we do is going to be either later moved to Bitcoin or obsolete in a few years. But it's just interesting, complex computer science problems that we love to work on, and we realize that this is not the safest system. It's more like experimentation, and that's not somewhere you really bet huge amounts of money on. I mean, if you wanna gamble or if you wanna test this, it's fine, but you have to realize this is experimental technology.
Yeah, I mean, look, I'm I'm a sucker for interesting problems just like the next guy. But at the end of the day, I got to ask myself, okay, is this thing going to contribute to is it going to contribute to me either reducing my Bitcoin exposure or increasing my Bitcoin exposure or maybe somehow trading my Bitcoin? And so I you know, even with something like the power law, right? So like, is there a model for some of these exponential bubbles? Maybe, maybe there is, but I don't plan on trading any of that stuff. I don't, is it interesting to me? It's marginally interesting, but I like to focus more on the power law itself because the power law itself to me is fascinating. And I just don't want to get I don't want to get too caught up in these weeds, right? And you see these DeFi stuff things. I saw this one woman, I can't remember her. She showed up in my Twitter feed. And she had this graph and it was so complicated and it was lending on Frax and Curve and this and that. She's like, I think I figured out this oracle of this and this is how I and it's just like it's so complicated, right? And and then you look at Bitcoin, which is one block every 10 minutes, one happening every 4 years, adoption that is clear, finite cap. And it's just, to me, Bitcoin is just sort of mathematically beautiful. Like it's just everything about it is just the difficulty adjustment every 2 weeks. Like everything about it is perfect. I don't really think you can improve Bitcoin. Now you can add stuff with the ecosystem around it, layer twos and exchanges and stuff, but you can't improve Bitcoin. It's just not. It really is not improvable. I think it you know it's not like a shorter block time. People have tried that. That's Litecoin, right? That's like right there. It's just like, this was a good choice. It's not like we need it to be quit faster. It doesn't. Caspa's faster, and it's a proof of work. Okay, it doesn't matter. Irrelevant. Fast is not needed. Uh, Scalable. Well, the fees. You know, there may be some evolution of Bitcoin layer twos. I think uh, Dan Moore said it the best. He's like, Bitcoin's going to work whether layer twos work or not. Now, if layer twos work and this stuff gets integrated into very seamless things that you can play video games and pay people in Bitcoin, that's great. But not necessary. It's not necessary. We do not need that to work, right? It's not like Bitcoin's going to fail if those things don't happen. Because, large purchases over $1,000, I don't make those large purchases every day. I don't. And if I have to pay $1 or $2 a fee to send somebody some Bitcoin, it works. It 100% works today. And so I think it's just a question of adoption. Now, a lot of people are like, take the view that, well, it's not interesting. Okay, it's a solved problem. I'm only interested in new things. And Raul Paula said this. He's like, I'm not interested in Bitcoin because yeah, sure, it works. But if you think of, yeah, it works and it's going to become the world money for the world, in the next 20 years, you should be very interested in it. You don't need to be interested in the fact that it's going to be changing. You just need to be interested in it. And that's what I think. I think Bitcoin is going to be, I think it's going to be the primary way that people on this planet store their value.
We have to have, and this is where probably your math background helps. We have to have the imagination to think some tool that's essentially better than every other thing we have. It's got all the right properties that we're looking in money. It has neutrality. It's instant. You move unlimited amounts, not unlimited, but I guess you can move any amount within the market cap that we have right now instantly. You move $10, $100, $1,000, $20,000. It's the same. It's just a number that's moving on the planet. You think about the resilience and reliability of it. You have at least 10,000 copies of the blockchain distributed around the world, and that's only the nodes we see. You have an army of diehard zealot owners of this thing. You have quite a bit of people that fully understand it, that they want to affect a revolution in finance with it. There's a lot of people that are just in it for the trade, but a significant number of people that want to see change for the better in the world. They want to see like more sound engineering around money, and they want to see less people messing up with people's wealth. So and this is a perfect example of capitalism. If there is a lot of demand for it, Bitcoin CEO will gouge the price of transactions, and that itself will kind of slow down the number of transactions, teaches people to aggregate transactions, only perhaps use it for larger numbers, don't overdo it. It kind of market heals itself. If there are too many people wanting to mine, Bitcoin CEO gouges the difficulty, right? So, and it kind of handles everything in a way that's consistent with market mechanism, and that's what really makes it amazing. It kind of adapts to the world, and finds ways around it.
It doesn't need any supervision. It's from pretty much the first line of code, the first block that was mined, no supervision was needed. And that's the remarkable thing. And if you go to crypto, supervision is needed every single step of the way.
Yeah,
right?
absolutely.
Like people now are panicking because the Polkadot treasury is going to run out of money in 6 months or something. Like, okay, there is no Bitcoin treasury, right? There isn't. There's no Bitcoin treasury that goes to pay projects that are voted on by the Bitcoin DAO. That doesn't exist. That thought is crazy, right? Um, you know, there's no Bitcoin DAO. There's no stakeholders of Bitcoin. And even if you have tons of Bitcoin like Michael Saylor, you don't really have any voice other than your just authority, right? As a person as to what kind of possible changes will happen to Bitcoin, right? It's not like you say, well, I own a lot of Bitcoin. I'm sorry. I'm we're gonna make the block size bigger now because I own a lot. But no, there's no process for that. So uh I think in that respect, it is completely and utterly unique, right? And I think that's it really, I was having this conversation with my co-author on the book, Ben, and we're like, and he's like, uh, the one thing I will say is Bitcoin's different from crypto, right? And he's owned a lot of crypto stuff in the past too. And he's like, Bitcoin is fundamentally different. It's just different. Every other crypto is just different from Bitcoin. And I think that's the hardest thing to get. And a lot of people just don't get it. I mean, they just don't get it. Everybody on the crypto side doesn't get it. Half the people on the investment side don't get it because they're like, these things all look very similar. You know, why am I buying this one instead of this other one? You know, so I, it, I have it's hard for me to really convince them, to be honest. Like if
See,
you're
see what's
either
what's
you
really,
either you get to that conclusion yourself,
yeah, exactly.
or you can't. It's not something I can hammer on you, and you're going to get it.
Yeah, in
I think.
conversation, you quickly understand if kind of this person is ready to get the message. If I don't get the signals, I don't even bother.
Yeah.
It's so difficult to take people out of their framework. And once you live in the existing framework, like I said, and you don't have that imagination to think about what can happen, unburdened
Yeah.
by what has been, right?
Yeah.
So I can't teach anyone to think like that. You have to get there yourself. You have to perhaps have some life experiences that tells you you need to think outside the
You
box.
know, it
Oh,
it 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 can be just listening to a video or a person. For me, it was. I think the thing that really jarred it for me was, I met Tom Lee of Fundstrat at
uh-huh,
a crypto event in Bahamas, not Bahamas, Bermuda,
uh-huh.
and he just his arguments were so compelling, and his delivery, I was just like, oh my God, yeah, I got to take this much, much more seriously than before, and Bitcoin is different. So I think um, you know it has to be over time. You're not going to get that aha moment immediately, and in some sense, I think crypto is a good training wheel for it. It's not a bad way to get in. Start with Solana. Start with Solana, have some doubts, and then discover Bitcoin. But it might take you 3 years. It took me a long time. So um, I think it's a tricky thing. I definitely think even though everybody's not going to get it, even though normal people are not going to get it, I think the very rich are getting it and they understand it. And they understand 21 million Bitcoin, and they don't understand. The super ultra high net worth are not buying in this Ethereum thing. They're not buying the Ethereum ETF. It's the ETH ETF is really a failure.
It's doing
Uh,
very badly.
it's a terrible, and it's like I was talking to my friend Andrew Parrish, AP Abacus, and he tweeted the thing, I retweeted it, which is, we were talking back in May, when they approved this thing, and it's like, you can't explain this thing in an elevator ride up. Like I can explain Bitcoin. It's been around forever. It's the largest cryptocurrency. There's 21 million. Can't change it. It's completely decentralized. It's digital gold. Okay. Okay. I own some gold. Great. I'll buy some Bitcoin. Ethereum. It's a layer one, has layer twos that are attached to it. There's an Ethereum foundation. There's it's inflation, but they're reducing some of it by buying some back. And there's but not right now. But in the past they were doing that. And these layer twos speed it up, but you need a different token on the layer twos. And oh yeah, there's these other layer ones that are competing with you for smart contracts. And the use case is NFTs, which we now know are illegal according to the SEC, and DeFi, which is also illegal. So I mean, that's a really hard sell, it's when you get out of the crypto bubble and you talk to a normal institutional investor, that's a hard sell. So I think the, you know, I think people who have people with a high net worth under they can get Bitcoin. It's simple enough that they can get it. And that's really that's what's going to make Bitcoin. It's like I tweeted, I think it was yesterday or today. I was like, you know, the there's an intersection between normal people, rich people, and Bitcoiners, right? And what's the key thing that's going to drive Bitcoin is the rich people who get Bitcoin, right? And somebody tweeted, yeah, Fred, you're probably right. It's the rich people are going to get this thing who are going to make this thing work, not the African nation, right? It's not really going to be the African, but it's the African nation ultimately will benefit because there's going to be hard money. Ultimately, they're going to benefit from hard money. But actually, the people who are going to benefit right now the most is the Michael Saylors of the world. Right? It's guys who are very rich who get involved in Bitcoin. It's BlackRock's clients. Those are the guys who are going to make those are the guys who are going to make it happen, right? Because if those guys understand money printing, they very much do understand it, and they have the choice. They have a choice. They're not like a housekeeper who just gets paid what she gets paid and has to live with whatever it is, and she's living day to day, paycheck to paycheck. If the ultra rich, they have a choice. They can get out of dollars. They don't like the U.S. They're out of the U.S. They're out of the dollar. They don't care. And it's interesting that when Richard Nixon went off the gold standard in 1971. 1973 is when the OPEC embargo started, right? And oil started going through the roof. 2 years later. Well, guess what? If you're an oil producing nation like Saudi Arabia, right? All of a sudden you're like, you know what? I don't really want these dollars that you're printing. You're gonna have to give me more of those for my oil because I only got so much oil. I got a lot of oil and I don't have to deal with you. There's a lot of other people who buy my oil. So I'm gonna raise the price of this oil, right? So rich people have options, and rich people do not have to take the money printer. The money printer really hurts poor people, And so I think rich people have options as long as rich people can understand Bitcoin, right? And understand that it's not a scam, that it is secured, and it's secured by all this proof of work and all these nuclear reactors worth of electricity and miners and infrastructure and all that stuff. And they can't make any more of it. Once they understand that and they're comfortable with that, they realize it's a hedge. It's a complete hedge to all this money printing. And they're going to buy it, right? So the only thing you need for Bitcoin to be successful is you need to think, are rich people going to opt out of the money printing thing with their money? And, I don't think that Saylor's unique. I think, he had $500 million in MicroStrategy. He didn't want to lose it. He switched it to Bitcoin. At some point, most companies are going to come to that conclusion. They're going to be like, wait a second. I had all this money. It's just sitting around at 3% or 2.5% once they lower interest rates again. I think we had a little bit of we had this moment with 5% interest rates where people could make a non-decision. Well, I'm making a lot of money on my money right now. I'm making 5%. Once you get back down to 2.5%, everybody is
No
like,
brainer.
they start sweating a little bit, because now they're realizing that they're really, in real terms, they're losing money. They don't quite know how much they're losing, but they know they're losing money. At
And it's
5%,
and
you
it's
can make
such a
occasional
no-brainer,
money.
It's going to be very difficult to find something else in this world that's going to do better than Bitcoin. And it's almost guaranteed because money printing is almost guaranteed. Like not even thinking about like growth, just keeping the value of your money. The best way to do that is to be in the hardest money. And what we know from government behavior, political fights, the budget, the deficit, it's never going to get better. No one's going to reduce spending, and they will keep increasing the money supply. Even if they don't want to, just think about this. You have to pay, most of the money in the world is somebody's debt. And on that
Right.
debt, you have to pay interest, which means next year you still owe the same amount plus the interest. So you
The
need money
interest,
supply to
the
expand.
interest, the interest right now is exceeds U.S. defense. It's crazy. They're going to have to lower interest rates just to even make ends meet. So they're going to continue. The money printing will continue. And as rich people realize that Bitcoin's for real, they are going to switch to Bitcoin, and Bitcoin price is going to go up. It's a very simple equation. That's the equation. And in order for this thing to work, you don't need consumer. So this is where everybody gets it wrong. People are like, well, this thing doesn't feel right for the consumer. But you don't need it to feel right for the consumer, right? It doesn't matter because it's not Instagram, right? So people are like, well, these Bitcoin wallets are so much more complicated than Instagram. Yeah, it is. It doesn't matter. But an ETF is no more complicated than buying any stock. So you're looking at something, you're comparing the wrong thing. You should be comparing an ETF to another stock. They're apples to apples. An ETF to Instagram is apples to oranges. You can't compare those two things, right? And if you look, or a Bitcoin wallet. So I think the growth pattern here is going to be Bitcoin ETFs outperforming because rich people want to put their money in Bitcoin ETFs. That's the simple way it's going to work. And if you believing in Bitcoin, is the only thing you have to believe is, are rich people going to defend their assets? And the answer is yes, they will 100%, and they did in 1971 too. They bought gold in 1971. That's what they did. The minute they could buy gold, they did buy gold, right? And now in 2024, finally, this year is the first year that those same people could effectively buy Bitcoin. First year. So we are in the beginning of a multi-year market where the wealthy class, the top percent of the US, the top 1 to 5% of the US in terms of net worth, can buy Bitcoin. They're going to buy Bitcoin. Now, they're not all going to buy Bitcoin day one, but they're going to buy Bitcoin. And there's only a finite amount of Bitcoin, and the mining is irrelevant at this point. So it's going to go up. And that's what's, and there's no technological risk because people are not buying a technology. They're not buying an app. They're not using this thing through an app. There's no technology of sending it or anything. It doesn't matter. They're just buying it and holding it. So I think given that, people looking at it as a tech thing are wrong. They need to look at it just as a pure investment. And I think as a pure investment, it's going to do fantastic. And I think it'll probably do pretty fantastic in the next 12 months is if I had to guess, I think it'll do. I think we're in that period where it's probably going to do really well. And although it will do better if Trump gets elected, all those same things are going to play if Kamala gets elected, right? And I just, we should just remind everybody it's not the end of the world for Bitcoin if Kamala gets elected. Larry Fink is a lifelong Democrat. Larry Fink, who runs BlackRock. Yeah, lifelong Democrat. Okay. So, I think that, Democrats say one thing, they do another thing. Bitcoin is, the ETF is here to stay. It's not going away. And the only thing that we need is to be able for people to buy the ETF. Now, of course, I think people should have self-custody wallets. I like to have DeFi and everything else. But even if they outlaw all those things, if you can just buy the ETF, that's enough. Bitcoin will do well. Bitcoin will do well. So I think I just don't see a lot of long-term risks for Bitcoin. In terms of an asymmetric risk return over the next 5 years, it's the best thing I've ever seen in my life.
We were on our own up until last year, but now Wall Street is all in. And if any of the risks that we might consider appear, they're also going to be on our side trying to defend this thing because they're making a lot of money out with it.
That's right.
So it's just very hard to think about negative scenarios at this point, and it's just a logical thing for people to do. It's a logical defense mechanism for people to adopt in a world where their assets are under attack. And as you said, the smartest people are going to do the right thing and they're going to defend their assets, and this thing is just going to grow. And then just because it's very predictable how this will happen in the future, it will also attract more and more smart people that might not be the pioneers, but they realize where we're going, and this is one of the easiest places to make money.
That's what I think. I mean, I'm all in on that, and again, look, I'm taking a very long-term approach. I don't want to be 100% in Bitcoin because also I just psychologically I don't want to be 100%. I don't think it's right to be 100% in Bitcoin.
So let me just add a very interesting thing I read in Morgan Housel's Psychology of Money. Have you read that book?
Which one?
Morgan Housel, Psychology of Money.
I have not.
And one of the most interesting things that stayed with me was that it's very important to plan for your plans not going according to the plan. So right. Even if you have the perfect model that you think is going to work 100% of the time, it's important to realize that, things sometimes just don't work. And I mean, we're not even talking about Bitcoin failing. Maybe just your life moves in a different direction that requires some other, maybe, easy cash available or some other planning. And if you're 100%, meaning you have nothing else elsewhere, you're assuming that your thesis is going to play out exactly how you think with certainty, and that's a very risky place to be. So I totally understand what you're saying, and being too invested in Bitcoin sometimes comes from an emotional thinking, like getting too excited.
Bitcoin doesn't care.
Bitcoin doesn't care, and then you can essentially get yourself into very risky places. You don't know that your emotions will not betray you. So if you have more, a bigger investment size than you can handle, then in one of those volatile episodes, you may do crazy things, right? So you don't know that. So it's important to realize that we don't know everything.
Well, I think that your behavior as an investor, people say, well, all you have to do is this, but all you have to do, all you have to do is you have to go when it's down 10%, buy a little bit, or when it's up over this, sell a little bit. Well, great. In an ideal world, do that. In a real world, when you're down, you just freeze, right? And in a real world, at some point you just completely panic and you don't sell just a little bit, you sell everything. Right. That's just emotions of people. Right. And it may not be even your emotion. Okay. It may be your significant other. Right.
Yeah.
It may be your partner saying, hey, Sina, Like, are we crazy? This is crazy. Young Johnny's future is college is you're depriving our Johnny's, college fund here. Like we can't do this. It's irresponsible. So there's a lot of ways things emotionally can go wrong. And I think you need to have some answer to that. Um, so, people are irrational. And, I think the guys like Warren Buffett, part of their secret, I think, is that they're so taciturn and they're unmovable. They're not that emotional people. I'm not Warren Buffett. If anything, I'm better than I used to be. I used to be a total traitor. I'm not that anymore, but I'm certainly no sage of Omaha either. And I think, the Sage of Omaha approach plus Bitcoin is a great combination. If you could somehow get both of those together, you're going to do great.
Yeah.
But,
If you're gonna invest like massively in Bitcoin, it helps if you've had 190% crash experience. So to see how
and look, you can look at it, you can watch it, but if you haven't felt it, it's not, you don't quite get it. But yeah.
Okay, awesome. So we've gone for like about 2 hours.
Okay, great.
Let's not give away all the gems.
Okay.
We've talked about your mindset, your process, how you started. Maybe because we also covered a lot about your work after you got out of school. So maybe I'm thinking I still love to learn a little bit more about your business work before
Oh, sure.
Bitcoin, but I'd like to perhaps quickly switch to how you got into Bitcoin, how you thought about it, and also more importantly, what you see in future in terms of, there's a lot of interesting things happening. A lot of adoption is kind of under the surface. I'm sure what we've seen with the ETFs is just scratching the surface.